What's up, boys? Today we're going to be going over how to find order blocks, what to do if an order block invalidates itself, and kind of just what even is an order block. Um, so pretty much what order blocks are is a move up or a move down before you get a bigger push. Pretty much what that indicates is that's where institutions are putting a lot of their large money. So us as day traders, regional traders, obviously we're going to want to kind of trade with the banks, be getting in when they're getting in and getting out when they're getting out. You never want to be right behind them where you're going to get smoked, because regional traders like us, we never can take control of the market. So you see here how we have a push down before a push up, push down before a push up. Let's go to the 1 hour time frame. They're more prominent, and let's find some order blocks and just get some really good examples of them. Let's see here. We should have some on here. So yeah, here's a great example right here. It would be like an order block. This is a higher time frame. So pretty much what you're getting is kind of like a consolidation inside of it, correct? You're kind of just trading inside a level, and then you get one final wick up in green, and this is a bearish order block. So you wick up in the opposing direction, fill liquidity, and then immediately sell off. In this case, we did have another liquidity sweep and go back to the highs because of how choppy price action has been. If we look down here, boom, push down before a push up, starting a new trend. So when we're talking about this area right here, so you're probably wondering like, oh, these are just, the same trend. We're still in bullish trend. Yeah, in the long run, but we are breaking trend right here. So right there, boom, trend is broken. We're officially in a bearish trend. We broke structure to the downside on a high level and high key area of resistance. So now we're going to look to either continue the sell off until probably somewhere down here, or we're going to want to sweep liquidity under this low right here, start an order block, and then make our push up. And that's exactly what we ended up doing here. So when you get these order blocks, it's not like a key signal like, okay, I have an order block, I'm going to take this trade, 100% it's going to work out. It's pretty much just an indication like, hey, the big banks are putting their money right here because they believe, in this area right here that it's a key level, stock is undervalued or the ticker is undervalued, and we're going to put our level into here and we're going to push the market up. So the thing with order blocks that tends to happen a lot is, let me see if I can find a good example. This is a decent example right here. So you get this push down before the push up, correct? So this would be the start of the order block right here. Pretty much this whole thing until the bottom of this green candle, this wick. So pretty much what you do is you get a big push of liquidity down here with these couple candles, and that starts of the new trends. The institutional buyers are getting in. It could, in this candle right here, price is starting to move up. But a lot of times what ends up happening is after the institutional buyers get in, they want to push price back down after it wicks up a little bit, stomps everybody out who's in short positions. They want to fill liquidity back down into this order block area, just like we did here. That's what they're going to buy again. Then you see this huge spike. So if we look at this, what's the key thing that happens? Every time we get an order block like here and here, we tend to get a big institutional push, a big pump in the market. That's because a lot of money is going into the market. Okay, so right here, boom, order block starts. There we go, swept liquidity, order block, two pushing down. Institutional buyers take control. They push price up. Everybody who is long or short, they stop them out right here above highs, or they stop them out right here above highs. That's why you see the liquidity. And the resistance zones are in between here. It's because those are highs where people have their stop loss or take profit set. Same with here. Another level of, resistance. So the institutional buyers come in here, they buy, push price up, stomp us as regional traders out, and then they push price back down, fill all their orders right here, go up to the next previous high, stomp everybody out, and it's a never-ending cycle. Of each high, you can tell there's, key levels of resistance right here. Boom, key level of resistance. Oh, what do you look at here? It's in line with that order block as well over here. So are you guys kind of seeing the pattern here? Like I'm seeing the pattern. Every time the market gets filled by these big banks and these big institutions. Oh, my thing is stuck. How do I get this off? So every time market gets filled by these big banks and institutions, we have a push up. Now, if we do have an invalidated order block, like let me go over here and find one. Wait, whoop. Sorry. You find an invalidated order block. They've been respecting a lot recently. Okay, here would be a good one. You get a push up in the market, correct? This is like a decent example. So you get a push up in the market here. We don't sweep liquidity because liquidity would have been right above here at this high. You get a sweep up in the market near that liquidity zone. Boom. And then you sweep down here back into liquidity, obviously. We don't sweep either levels of liquidity. If this is a real order block, like many of you probably thought this was going to be, we would have swept at least here. We would have swept at least here with liquidity, sweeping all this liquidity that's above these highs, little stop loss, take profit orders that regional traders like us have. You get that push back up to liquidity, doesn't seek it, starts showing resistance, and we end up getting a sell-off. Never breaks structure to the downside, stays within that zone, and then we end up just trending back up. On lower time frame, it's probably more prominent. We probably did get an order block in here on the lower time frame, but since we're using the higher time frame example, that would just be chop. Now, let me go into here. TradingView, you really have to fix this shit. Now on the 15-minute time frame, which we like to trade a lot, here's some really good examples of some really good order blocks. Right here would be a really good one. Boom. Pretty much pushing up, price sweeps liquidity, boom, right here. And we end up making a way down, breaking structure to the downside, where price sweeps liquidity again, boom, make a way up, last push up, boom, sweeping liquidity to the downside. There's not many too fair order blocks actually, which I'm kind of surprised on. I'm not really seeing many. This would kind of be a failed order block where you had to push down before a push up, and then it retested below that. Like this would be sketchy. Like this is like kind of a bad trade. We have a push down before a push up. Boom. Straight manipulation in the market here on the 15-minute. Then institutions come down, push it back into price. They push it too far to where here, to where if I saw this, I'm thinking, okay, I'm most likely going to take a short. We pushed out of that level right there. And it actually did end up holding up in the long run, but yeah, that was a sketchy one right there. But yeah, pretty much all order blocks is the push up before the push down. So, or the push down before the push up. So pretty much all you're getting is consolidation, and then you get a wick up, and then you get this huge move down, or you get, you know, consolidation, and then you get a wick down and a huge push up. So pretty much what that is the banks filling liquidity at the best price they possibly can, here and here. They fill liquidity at those levels and then push the price higher or lower based on what they're doing. If they're short, which would be short right here, or long right here, this is what they're doing. Banks get in here, push price up. Banks get in here, push price down. So, and the evaluation on this would be, boom. It's kind of, think of it kind of like a fair value gap of the retest level. So those two candles that push down, most likely, the stock is going to want to retest back into that order block at those two levels. So boom and boom. And there you go. So a respected order block would be push down here and then a push up, or a push up and then a push down right there. Sometimes they never retest back in and they just continue to sell off. But yeah, if you want to simplify it, pretty much all order blocks are a push up or a push down after consolidation to start a new trend. So you're never going to see a super bullish trend and then an order block. you're going to see a bullish trend and then consolidation, then an order block. So don't get manipulated and make sure you're taking the right trades. But that's all I got for you guys. That's order blocks.